All right, let's go to the crude oil. All right, so we have the J signal chart over here. This is the J signal chart, the white chart. What we noticed this morning is that we were in a trading range. Okay, you got low values in green, high value in red. All right. What you want to do with this type of chart right here, this white chart, is called the J signal chart. You want to look for any break outside of value, any break outside of high value or low value, and then look for the first retracement. So any close outside of value, the first retracement should be a good one with positive market delta. So you can see we've been contained in between low value here, high value here, and then she broke. This creates strength in the market. Once it closes outside of high value, okay, look for the first retracement. You go over to your market delta. Your market delta was right here at the time. You're going to look for a positive market delta. It gave you a positive green market delta right here at the low of the Fibonacci dot. You want to enter your position at that close of that bar, so the open of the second bar. The open of the second bar is when you want to get in the position. Your hard stop is going to be a 15 tick hard stop, catastrophic stop. You don't risk more than $150 per one contract. But then you're going to drag your stop 2 ticks below that swing low. So your stop loss, your entry was 78 long. Your stop loss was 65. You had a 13 tick stop loss on the trade, on this trade setup. You had a $130 stop loss on that setup right here. You open it up at 78. Your stop loss is at 65, hard stop loss, 2 ticks below the swing low. What you want to do on your dome, you can do 2 ways to scale. You can scale at the first set of symmetry dots, which is over here. Look on the white chart. I have these red dots that automatically come up. You want to scale 2 ticks within symmetry dots. So you can scale right there, 2 ticks within symmetry dots, build 50% of your position, or the first 10 ticks would be 88 right there. You can bail your first position, 50% of your position at 88, or the first set within 2 ticks of symmetry dots. Once you get your first position off, 50% of your position off, you want to try to get to the second set of symmetry dots. So your order is going to be 2 ticks below that second set of symmetry dots. You can bail another contract. Your ultimate goal on a breakout of HV and LVA is getting to the third set of symmetry dots within 2 ticks. So when we were down here, I was talking about how symmetry, you can scale within 2 ticks. We want to try to get to the third set of symmetry dots. Sure enough, it came within 2 ticks of symmetry right here at 28. That is now the high, and the market's starting to roll over. Our goal on symmetrical wedge breakouts or breakouts should be, or even hard trend days, should be the third set of symmetry dots. But you want to scale 50% at the first set or the first 10 ticks, because the one thing we don't know as traders is how far will this run. So all we can do is scale the position after we get in. We put the position in at the close, when this closes green, open up at the next bar, 2 ticks below, the stop loss is 2 ticks below. On the dome, you can have the first 10 ticks, can be your first set of targets. And then you can go break even +1, bring your stop up if you want. Break even +1, and never hit it. And then you try to get the first, second, third set of symmetry dots. It doesn't, yeah, if you're really close, you can exit Larry if it turns a red negative market delta. You are correct. But that shows you the reward to risk. Let's take a look at the reward to risk on this trade. Our goal right here is 78 and got to 28, right? 78 to 28. So we almost had $500 trade on our hands, and we risk $130. And that's what we try to do in the system. We try to get between $400 to $600 per trade, and on hard trend days we try to get up to $1,000, 10 to 1 reward to risk. Our goal is to get to 4 to 1 reward to risk daily on our trades, 4 to 1 reward to risk, and on trend days we try to get anywhere from 6 to 10 to 1. That's your goal as a trader in this room. We're not trying to risk $100 to make $100. All All right. The system is too accurate for that. You want to try to risk $130, try to make $400 to $600 per one contract on average. Okay. On hard trend days, you got to try to get the $600 to $1,000 trade on the runner. Does that make sense, guys and gals? Are we on the same page? Everybody on the same page on how to use symmetry dots now? Symmetry dots. I've been educating the symmetry dots the same way ever since I opened the room. The third set of symmetry dots is your goal. Been doing it the same way from the infancy of the room. Ever since I developed those little suckers. They are extremely accurate. What do the 3 blue dots mean on the white chart? The dots happening are retracement levels. What they mean is this, Walker. Okay. Our whole methodology is this. Our methodology is let market profile set the trade up first, and then we let market delta pop us in the trade, right? Well, what are these blue dots for? If I look right here, and I broke out a high value area right here, right, Walker? See how I broke out a high value? Those blue dots showed me where a possible retracement low would be to look for positive market delta. This blue Fibonacci dot told me right here to look for a buy signal because my market profile showed that it closed above it. It showed strength. Now I'm allowed to take the first Fibonacci retracement long. That told me right there that that is a long setup because market profile set me up. That's how the Fibonacci dots are extremely important. This Fibonacci dot is extremely important because the market was flat. You can buy the low, sell the high. So these 2 Fibonacci dots are buys also because you're buying the lows. This Fibonacci dot is important because you broke out and you retested. So it's an important Fibonacci dot because market profile set the trade up. What you're going to find is once you get in, you break out a high value, you look for the first retracement. You break outside a low value, you look for the first retracement. Make sense? And then we let market delta pop us in the trade. All right. What that Fibonacci dot does, it takes 11.01 retracement, just over 6.54 retracement, 4.236 retracement, 1.62 retracement, 62% retracement, 1.272 retracement. It looks for confluence on the chart. So what it does when these guys pop up, it's calculating all these Fibonacci levels from the previous highs and lows. It's finding a confluence level between, let's say, this previous high point and the other previous high point, where maybe the previous high point was 1.618 retracement it's showing here, and this is a 62% retracement from the prior move. And it's not going to show up until there's a confluence of those levels. If there's a confluence of those levels, you're going to get those dots that pop up. But the dots don't mean you automatically get in and buy and sell. You want to let market profile set it up and let the dots find the area after market profile finds sets up and you get the first retracement. In other words, instead of driving a Lamborghini with just market profile, now you're driving a Bugatti because you got the Fibonacci's that help out with the area. All right, it's a complete trading system because I'm letting market profile set it up, but I'm letting my Fibonacci dots find me the area to look for market delta. It's just a gorgeous thing. It's a marriage made in heaven.